Welcome to my channel Gayatris Academy, and today we are going to deal with very important topic of CAFinal IDT. Okay. Just we will understand today what is time of supply and value of supply. Good evening everyone. Today we are covering two of the most important and at the same time most coding chapters of GST, that is time of supply and value of supply. Okay. Now why I am calling them very important, because students usually memorize provisions mechanically, but I say don't ask right sections. I say ask when does liability arise, what amount is taxable, what adjustment is required, what if payment comes earlier, right? And what if discount is after supply, what if it is RCM, and suddenly you will not be able to answer. So you have to understand the topic very clearly so as to attempt the questions. Part 1, let's do basic foundation of work. Imagine you are own a business. You sold goods worth rupees 5 lakhs. Now government asks you two questions. Question 1, when should you pay the GST? That is time of supply. Question 2, on what amount should GST be charged? That is value of supply. Entire chapter resolves around these two questions. Okay. Time of supply, meaning time of supply simply means, as per this IDT, the point in time when GST liability arises, or in simple language, when does government want its tax? Remember this line? Time of supply for goods. Government says for goods, time of supply is earlier of date of issue of invoice or date of receipt of payment. Okay, which is earlier, that is the time of supply, date of issue of invoice or date of receipt of payment. Let's take one example. Invoice date 10th June, payment date 25th June. Which is earlier? 10th June. Therefore, GST liability arises on 10th of June, even though money came later. Okay. Government says once invoice is issued, I will not wait for payment. Very important understanding. Let's do number 2 example. Advance payment. Payment received 5th June. Invoice issued 10th June. Now, which is earlier? 5th June. So, GST liability starts on 5th June. This concept earlier created huge confusion in GST. So, important amendment note for goods. GST on advances by regular taxpayers was removed in many situations. But conceptually, ICAI still tests this adjustment area. Always check applicability in your exam paper. Time of supply for services. Now comes services. Here are also some basic principles earlier of invoice date or payment date. But services create more practical complications because services are continuous. Okay. Let's take another example. Consultancy services. Okay. Mr. X provides consultancy. Okay. Invoice date is 15th of July. Payment 30th July. Time of supply 15th July. Simple. Okay. Another example. Payment is first. Payment received on 1st of August. Invoice issued 20th August. GST liability 1st August because payment came earlier. Why is ICAI loves this chapter? Because students forget one thing. You are not finding accounting recognition. You are finding GST liability trigger point. That difference is very important. Okay. Now, another thing we have to know here, reverse charge mechanism and time of supply. Okay. Under RCM, that is reverse charge mechanism, rules completely change. Okay. For we take an example of an advocate service. ABC Limited receives legal services. Invoice date is 1st July. Payment date 25th August. Now, under RCM for services, time of supply is earlier of payment date or 60 days from invoice. Now, 60 days from 1st July is 30th August. Earlier is 25th August. Therefore, GST liability arises on 25th August. Important twist, right? Suppose payment not paid till 60 days. Then liability automatically triggers after 60 days. Import of services. Another example. Suppose Indian company receives software consultancy from USA. This becomes import of service. Okay. GST payable under RCM. Place of supply. RCM, time of supply, all integrated together. Change in rate of tax, most confusing area. Okay. Now comes a thing. Suppose GST rate changes from 12% to 18%. Question, which rate applies? Old or the new one? Answer depends on date of supply, invoice, payment, practical understanding. Government checks was transaction substantially complete before rate change. If yes, old rate. Otherwise, new rate. Right. For example, rate change on 1st October. Goods supplied 25th September. Invoice 5th October. Payment is made on 10th of October. Supply before rate change, but invoice or payment after change. Which rate will come? Old rate applies. Why? Because supply itself happened before change. Okay. Common mistake which students often do. Students blindly memorize the tables. Instead, ask when was supply substantially completed. Then chapter becomes very easy. Then we have the value of supply. Next question arises for our brain is that suppose GST liability arises. Okay. Now government will ask on what value should tax be charged. That is value of supply, basic rule. Okay. Transaction value is taxable value, meaning price actually paid or payable provided supplier and recipient not related and price is sole consideration. Example, let's take laptop sold for 50,000. Okay, the GST applies on 50,000, simple, but practical life is never simple. So law says certain things must be included. Inclusions in value. What are the incidental expenses? Example, packing charges. Product price is 1 lakh. Packing is 5,000. So taxable value 1 lakh 5,000. Why? Because packing is connected to supply. Then we have to also add commission and expenses, supply charges, loading, design, testing, commission. Okay, all these things become part of the taxable value. Let's take an example to understand this. Machine price is 5 lakh. Installation is 20,000. Packing is 10,000. Taxable value 5 lakh 30,000 because installation and packing will be added to the value of machine price, right? Again, interest, late fee, penalty, very important. Suppose customer delays payment. Supplier charges, late fee of rupees 2,000. That also becomes taxable. Next is another example. Goods value is 1 lakh. Late payment interest 5,000. GST applicable on 1 lakh 5,000. Student think interest is financial income. Okay. But GST says if linked to delayed payment for supply, it becomes part of the supply value. Then we have subsidy directly linked to price. Government subsidy excluded. Non-government subsidy included. Example, mobile price 20,000. Manufacturer receives 2,000 subsidy from private company. Taxable value will be 22,000 because subsidy influences the price. Then we come to know about discounts. Okay. This is the most important area. Pre-supply discount allowed as deduction. Price 1 lakh. Discount before supply 10,000. GST on 90,000. Simple. Post-supply discount. This is the trick area. Allowed only if agreement existed before supply and recipient reverses the ITC, that is input tax credit. Otherwise, deduction not allowed. Example, dealer incentive scheme existed before sale, right? Supplier rater gives discount, then deduction allowed, provided ITC reversed, that is input tax credit reversed. Common mistakes here, random year-end discount without agreement, not deductible. Then we have the related party transactions. Suppose supplier and buyer related. Then transaction value may not be reliable. GST law says use valuations rules. Example, holding company sells goods cheaply to subsidiary. Government suspects undervaluation. So valuation rules apply. Then we have pure agent concept. Very practical topic. Suppose CA pays ROC fees on behalf of client. That reimbursement may be excluded if CA acts as pure agent. Conditions separately indicated. Actual amount recovered, incurred on behalf of client. Example, professional fees 50,000. ROC fees paid on behalf of client 10,000. If pure agent conditions satisfied, GST only on 50,000, not on 60,000. Composite and mixed supply link. Sometimes valuation interacts with nature of supply. Example, gift hamper, chocolates, juice, dry fruits. It is a composite mixed. Tax rate depends on classification. Okay. Then Practical, I say, is do one thing, some. Whenever practical question comes, step one, first identify nature of the supply. Second, find time of supply. Third step, find value of supply. Fourth step, apply correct GST rate. Okay. Then step 5, check RCM if applicable. Okay. ABC Limited sells machinery. Basic price is 5 lakh. Okay. Packaging 20,000. Installation 30,000. Discount before supply 25,000. Interest for delayed payment 10,000. So taxing value will be 5 lakh plus 20,000 plus 30,000 minus 25,000. That is discount before supply. So we get 10,000. Now 5 lakh 35,000 GST applies on 5 lakh 35,000. Okay. So from exam point of view, focus on RCM, change in the rate, what rate was there when the actual supply took place, vouchers, advances from value of supply, focus on discounts, right? If you are seeing for the value of the supply, focus on the discounts, the interest, subsidy, related party transactions or not. Okay. If whether there is a pure agent. Okay. So all these things have to be kept in mind while doing the sums. Okay. Just a memory technique. Time of supply, answer when to pay GST. Okay. And for value of supply, answer on what amount to pay the GST. So these are the very important points. Okay. Earlier of invoice or payment, that will be the payment date. RSM has separate rules. Interest becomes taxable. Pre-supply discount is allowed. Post-supply discount conditional. And packaging loading is added to the price. Pure agent is excluded, right? Related party valuation rules is followed. Change in rate, practical adjustment area. Okay. So if you master time of supply, value of supply, you will be able to solve some practical questions related to GST. Thank you.